Mastercard is a digital payments name that everyone would be familiar with. Why do you like this company?
So we've owned Mastercard and Visa since day one in the fund and for many years before that. We like them because they are the payment network companies. And so lots of people would have interacted with things like Afterpay or Apple Pay or PayPal, and we always get asked, are they disintermediating the networks? And the answer is they're not. And the reason why is because you'll always find that they always connect back to your credit card. And Apple Pay is the best example here. Tried to disintermediate the networks, ultimately just link it to your credit card. And so what that means is all these innovations around fintechs and all the money that goes into fintechs just accelerates the growth of the networks. It accelerates our shift to digital payments. And so from our point of view, for Mastercard and Visa, that opportunity has been primarily around shifting cash to digital. And that process has been going on for a decade now and still has further to run as we move to things like tap and pay, or we move to things like e-commerce, or we move to the countries that are still using cash. But once we go beyond that, there are even further opportunities. There are opportunities for the networks to be used again, for businesses back to consumer payments, for crypto, for the networks to be used again for governments to consumers, for the networks to be used again for business to business. And so the total addressable market opportunity for the network continues well beyond the disappearance of cash. Mastercard does a really good job of explaining this at their investor day. It's worth looking at. And they ultimately believe they can grow their earnings at over 20% per annum for the next 3 years, and their revenues at more than 15% per annum. And that's just the next 3 years. Beyond that, it should continue. And this is really about this shift of how you can use this one network asset more and more different ways to solve, the digital economy as we see it today.
So you mentioned owning both Mastercard and Visa. Do they have the same business model, and why do you own both?
So they have a very similar business model, and so together they connect 30 million merchants around the world with hundreds of millions of consumers and quite frankly hundreds and hundreds of thousands of banks. And so it's very hard to disintermediate either of them. They do compete with each other in many places, and some of them are stronger in other places than others. The key difference between Mastercard and Visa is Mastercard's been a little bit more forward thinking on some of these new technological opportunities, these opportunities of expanding the TAM beyond just business to consumer, consumer to business payments. And so from that point of view, Mastercard trades at a slightly higher multiple. But both of them, we think, can continue to grow their earnings more than 15% per annum, and Mastercard's just growing that little bit faster. And we think they can do it for a really long period of time. We're not paying a high multiple for them, so assuming the multiple is roughly mid-20s to maybe 30 times earnings, assuming it holds that model and they continue to grow their earnings at 15% per annum, then their share price is going to grow at 15% per annum, and that's ultimately going to drive us towards the returns we're looking for.